Good morning, everyone. Thank you for joining us for today's webinar. We do have a handout that's available for you to download from the Handouts pod. You can just click on the tab that says Handout and click on the file to download and save it to your computer. There will be 4 polling questions throughout the webinar today, so be sure to be on the lookout for those. Answering those polling questions is how you'll get your CPE. If you answer all the polls during the webinar, you will receive a CPE certificate in 2 to 3 weeks to the email that you registered with. And if you have any questions for our instructors today, you can type them into the questions box and they'll get to them as time permits throughout the webinar. And that's all for me. I'll turn it over to you, Jonathan.
Okay, thanks so much, Morgan, and welcome everybody to our next webinar on leases. It's been a big roller coaster with, I'm sure many of you are focused on revenue and 606, and hopefully you've been able to tune in to a few of those, or maybe you've caught some of our previous lease webinars. If not, they're all available on our website or will be soon to watch at your own schedule as time permits. So anyway, thanks for everyone for tuning in today. Certainly have a lot to get through, a pretty exciting topic. Hopefully not as monumental of a shift, at least in terms of effort, as revenue is, but still a lot of work to do nonetheless. So as Morgan said, if you have any questions or just things that kind of come to your mind, please feel free to use that Q&A feature in the GoToWebinar here. We'll be trying to man that throughout the webinar today. And without further ado, we'll go ahead and introduce ourselves. So I'm Jonathan Krafchick. I sit here in the Raleigh office at Cherry Bekaert, but I oversee a lot of our A&A process and methodology, or any new tools are going to come through me. So I've been at the firm for a very long time, and then Michael and I have worked together on the lease project for a while now. And so I'll let him go ahead and introduce himself real quick. Michael?
Hey everyone, I'm Michael Hoos. I'm a senior manager, part of our professional practice department based out of the Raleigh office, and I spend a good deal of my time doing webinars such as this, and then also doing quality reviews and answering technical questions for the firm.
Very good. So we'll get through some of the nitty-gritty with the lease standard here in the next couple minutes, but I wanted to spend a little bit of time just talking about the timing. This is something that tends to get a little overlooked, and we focus on the debits and the credits, which is no doubt important, but another piece of this is similar to 606. This can become a fire drill really fast. And so clearly, if you're a public company, you need to do things a lot sooner, or at least a year sooner than our private friends. But either way, this is something certainly not to be underestimated. So I figured I'd go through a little bit of a loose timeline for things to think about while you're considering implementation of 842 or the new lease standard. The biggest one, no doubt, is going to have to just be getting an understanding. I think most of us have heard, hey, they're going on the balance sheet. And that is true, but there's a lot that kind of underlies that, not the least of which is, what is a lease? Where are they held? Who can actually get us into these contracts, and so on and so forth. So gaining an understanding, getting a team together, and all that is certainly important. But when we get into the specifics, one of the things that I think is going to be probably one of the most the biggest challenges is just identifying this lease portfolio. Where are your leases? How many do we actually have? What is a lease under 840? Does it change under 842? If it does or doesn't, still do we know where they are? Are we centralized? Are we decentralized? All that, and then getting the call out to everybody in your organization. This is going to be the tough one, at least in my opinion, because after that, you've got to say, all right, who can actually insert or get the company entered into a lease? And if it is more than the people that are knowledgeable of 842, that can certainly be an issue, because you want to make sure these terms, the way these things are written under the new standard, make some sense for your accounting departments. We'll get into some specifics later in terms of all the data that needs to be gathered now inside of your contracts. It is certainly more. And so we'll go into that a little bit later here on the webinar, but actually just sifting through all of these leases. We've dealt with some companies that have 5 leases, which is really simple, and they're not nervous about the new standard at all, which is great. We've also dealt with companies that have 3,000 or 4,000 leases, or maybe even more in some cases. And so you can imagine the manpower that it's going to take to review all of that lease data to make sure that it's accounted for correctly under 842. What we're doing under 840 is great, but we're going to have to go through lease by lease to make sure that you're accounting for these things correctly under 842. And so reading these things is certainly not to be underestimated. And so we're saying 2 to 3 months, maybe 4, 5, 6 months for some companies, depending on how big your lease portfolio is. After that, looking at your actual lease processes, how are we doing things currently? What is the gap analysis? What are some things that we're doing on the accounting and reporting side? What does our technology look like? What kind of systems do we have in place today? What kind of systems do we need going forward? We certainly need to look at and get an implementation plan for the reporting requirements, for the disclosure requirements. Along with that is getting in terms any policy elections. We'll talk about a lot of those practical expedients here today. What are the ones that we think will be best for our company, writing those policies, updating our policy manual to comply with 842, and then of course having an impact assessment. What is the magnitude of this? And then with that, how do we communicate to the board, to management, to the users of the financial statements, to all the departments if we're going to go the decentralized route, and so on and so forth. So I say all that to say it's probably a good time to get started. And so we've kind of broken this down a little bit. Assuming you're a private company with a 12/31 year end, when should we start? Yes, it depends on the size of the company, but of course the more important piece is this lease portfolio size. So if you have a really small lease portfolio size, 6 months is probably just fine. And so you probably want to start this sometime this spring, maybe in the early summer, to make sure that you're ready to go come January 1, 2020, when this is effective. For medium lease portfolios, probably during your audit right now. So for many of you who are starting to get ready for the audit coming up, this would be a wonderful time to talk to your auditors and make sure that you're doing what you need to do to get started, to get ready. And then this time next year, it will be a much less of an emergency. If you have a large lease portfolio, this is obviously where you're going to have a lot more need to get started early. I say December 2018, but now would be probably good, but this is going to be quite the undertaking and something you may want to consider outsourcing some of these efforts, or at least getting a team that can be much more dedicated to this. You've got competing priorities with 606 implementation, tax reform. Certainly you've got your own businesses to run behind that. You need executive buy-in to make sure that it's not just the accountants driving this, that a lot of departments are going to have to get involved, from legal to IT to the CEO and so on and so forth, to make sure that everybody's on the same page. Identifying the leases, hard to find them. How many actually do we have to do? This is certainly something we need to get started and do right now. Before we go too much deeper, I want to go ahead and just open up our first poll question for CPE purposes. And so we're going to just ask really simply, what industry are you in? Are you in healthcare, industrial or manufacturing, real estate construction, technology, or something else? And we will go through and just kind of tailor a little bit of our discussion to maybe where some of those industries fall. This is going to hit some, of course, more than others. Obviously, if you're in real estate construction, you're handling a lot more leases than maybe some of those that just have one office with very little operating leases, at least currently. Okay, so with that, you can go ahead and finish answering that poll with which industry you're in, and I'm going to hand over the next part of our webinar to Michael Hoos, who's going to give us a little bit of a refresher on some of the lease standard before we get into some of the implementation issues that we have seen. So Christy, if we can go ahead and close that poll, and we will get back started with the refresher for leases. All right, Michael, you're up.
Thanks, Jonathan. Yep, so we're going to go over just some of the nuts and the bolts. And first, we're going to kind of do a juxtaposition between the old lease standard and the new lease standard. And so with the old lease standard, ASC 840, there were four, red line criteria. Now, with the new lease accounting standard, 842, we're still going to have four criteria, but we're going to add a new criteria. And so under 840, if there was ownership transfer at the end of the lease, or if there was a bargain purchase order, or if the lease term encompassed 75% or more of the useful life, or if the present value of the lease payments was 90% or more of the fair value of the asset, that meant that it was a capital lease. And we're still going to have basically the same four criteria, but they're not going to be a bright red line, 75% or 90%. It's just going to be, transfer of ownership, option to purchase that's reasonably certain. If the lease term is a major part of the economic life, so that's kind of like the 75%, but there's no bright red line. It's just, is it a major part of the economic life? And the board has said that they would not object if a policy election was made to have 75% be that kind of threshold. Present values of minimum lease payments is substantially all the fair value. Same thing. It's not a bright red line anymore, but the board has said that they would not oppose if the company used 90% as the threshold for determining whether or not that present value of those payments are substantially all the fair value. And then the new criteria, the fifth one, is going to be, is the asset specialized in nature or not? And then kind of looking at the second bullet under the old lease standard, operating versus capital was the big decision. So you went and you applied those four criteria. If it was an operating lease, then it would just be a P&L impact. There'd be no balance sheet impact. And but if it was a capital lease, there'd be a balance sheet impact. And that was the big difference, determining whether it was operating or capital and applying those criteria. Now, moving over to the new lease standard, the right side of the screen, and the third bullet point underneath that, now it's really short-term versus operating versus financing. So if it's short-term, if the minimum lease period and those periods that are reasonably certain to be exercised is less than 12 months, then it's considered a short-term lease, which has no impact on the balance sheet. It's sort of like the current operating lease. But if it's greater than 12 months, then you have a decision to make depending upon certain criteria, and that is it going to be operating or financing? And either one of those, so the fourth bullet point underneath the new lease standard, either one of those is going to have an impact on your balance sheet. And then, of course, the very last bullet point, with any new standard, there's generally going to be some additional disclosures that are going to be required under 842. So let's talk a little bit about some other pertinent things that are kind of unique with 842 that can be a little bit different than 840. And let's talk about the term of the lease and the transition approach that you're going to apply. So the lease term, in my opinion, is probably the most critical judgment call that needs to be made. And the lease term is really kind of created three different considerations. You have your non-cancelable period. That's the starting point there. And then if you have an option to terminate the lease, so let's say we had a 5-year lease, but after year 3, I can terminate it within 30 days notice. That is considered, those periods beyond that option to terminate would be included in the lease term if the lessee is reasonably certain that they would not exercise that termination clause. And kind of the corollary to that is the orange box, the option to extend. So with the option to extend, if you are reasonably certain to elect that option, then you would include those option periods. So naturally, and this is really impactful because the lease classification criteria that went over in the last slide, a lot of that's dependent upon the lease term, like the useful life or the present value of lease payments. And then also the size of the right of use asset or the size of the lease liability will be dependent upon the lease term. So it's really important that you get this right. So naturally, folks are going to be asking themselves, well, you say reasonably certain to extend, or reasonably certain not to elect an option to terminate. Well, what does reasonably certain mean? So let's talk a little bit about what reasonably certain means. From a percentage perspective, reasonably certain is roughly 75–80% sure. If the option to extend a lease is controlled by the lessor, then you're going to assume that extension is going to be made. So the lease term would be your a minimum period plus any periods that are going to be extended that are under the control of the lessor. But if the options are not under the control of the lessor, some of the things that you have to think about are contractual terms such as penalties. Is there a penalty for leaving the lease early? How important the lease property is to the entity. If it's extremely important, then it's probably going to extend beyond that bare minimum lease period. How unique the lease property is. If there's no piece of property like it on the earth, then you're probably going to end up renewing it. And so any renewal option periods would likely be a part of that lease term. Availability of replacements, same concept. Leasehold improvements, if you've made significant leasehold improvements, especially if they have been made lately, near the point in time where the option to renew needs to be triggered, then you're more likely going to have to include some of those additional periods as your lease term. Below market rates. If you're receiving a below market rent, then it's kind of assumed that you would probably renew. If the cost of moving, direct and indirect, such as opportunity cost, if those are significant, then that's going to be a barrier to move to not elect that option. And so you're probably going to end up having to include more periods in your lease term than maybe the bare minimum. Now, past history isn't the primary consideration, but if you have a past history of renewing a lease, maybe you have a month-to-month technically lease, but you keep renewing it and you've been doing it for years, and there's nothing that's changed, then that might be a indication that there is a economic penalty for not renewing, and so that lease term might not be just month to month. It might actually be something other than just a short-term lease. And then, of course, tax implications and other things that might impact your decision. The only thing I would add to this slide would be that if there's a decrease in rent payments upon an exercise, that creates a rebuttable presumption that that option would be exercised. So if I have a renewal option and it actually lowers my lease payments, then you would assume that lessee would renew. So let's talk a little bit about the transition. First question, of course, is when do I have to do anything? And if it is a fiscal, if you're a public entity, you have to do something for fiscal years beginning after December 15th, 2018. So basically, if you're a calendar year-end public company, then January 1st of this year, you are technically needs to be under 842. If you're a private entity, then it's for fiscal years beginning after December 15th, 2019, or put another way, if it's a calendar year-end entity, it would be January 2020, so the beginning of next year. And of course, early adoption is permitted, and I've actually seen a number of our clients and consulting clients early adopt. It's not a particularly popular thing, but it is definitely something that has been done. So you would not be alone if you were to early adopt. In addition to the actual effective date, the transition method is often an important consideration. And so under 842, we're going to have a kind of a modified retrospective approach, and you really can have kind of two elections. You can choose to report all comparative periods under 842, or you can elect to record just the current period under 842 with in all prior periods under 840 and have a cumulative catch-up in the year of adoption. The important thing to think about here is that a lot of these transition methods are dependent upon when the lease started, and so the lease started at the lease commencement date, not the signature date. So you might sign a lease in 1 year, but then you don't actually move in until the following year. It's the lease commencement date is the year of when it started for determining whether or not it's a lease that needs to be part of your cumulative catch-up or not. And that kind of leads us into our second polling question for CPE, and that is, where are you on the implementation process? Have you not started? Are you still learning about the standard? Maybe you've started, but you're not too very far along. Maybe you're already started, but partially complete or substantially complete, or you're done, you're ready to move on. But make sure that you enter in your response there to get your CPE credit.
Very good. And just as a reminder, you need to answer, I think, at least 3 questions for CPE credit. And as the answers come in, just a recap of poll number 1. It looks like most of you are in other industries that we didn't have listed there, which is great. And so we'll keep this miscellaneous. As far as this answer, interestingly, we've got 2% of you that have marked as you're complete with the lease implementation. I imagine some of that is because you have no leases, and then some of that is because you're just way ahead of the curve, or like Michael said, maybe you've early implemented. But 57% have not started it at all. 28% have started but are not very far along, and then the rest of you are either partially or substantially complete. And hats off to you. For sure. And so, but to the majority of us here, it looks like we've got some work to do. So I'm glad that you're here. With that, we can go ahead and move on from the poll. Thank you. And we're going to get into a little bit more on maybe not just what the standard is, but some of the things that we can do to make the transition into 842 compliance a little easier. And so the FASB has done a decent job since the Private Company Council kind of came into play with taking into consideration certain things that make some of their standards more complex to implement. And this standard, they did try to build in a few practical expedients that did have private companies in mind. And so we'll go through a few of them, not all of them. There are many more in here, but we're going to go over some of the more popular ones or some of the bigger impact ones. The first one that you need to keep in mind is the practical expedient package. So there are some that are easier, that allow the standard to be easier to adopt. This is certainly one of them that will help in the transition. And so this is a group of practical expedients that allows you to skip some of the steps that would be required under the new standard. So you can see the 3 listed here together. First, if you elect the practical expedient package, you won't have to reassess whether the arrangement is a lease or if it contains an embedded lease. So the new standard includes a new definition on what is considered to be a lease. And under this expedient, if you determined under 840 that you had a lease, you can continue with that treatment. You don't need to reassess or reevaluate all the contracts when searching for leases. The second one is similar to the first, and it is about reassessment of the lease classification. So under 842, the rules are slightly changed, as Michael went through briefly, in terms of if something is capital, you'll now call it financing or an operating lease. And if the practical expedient is not elected, so if you don't choose to elect the practical expedient package, the lessee is required to reassess classification for all leases. So if you won't have very many leases, maybe not that big a deal, but if you do have a lot of leases, this can really save a lot of time, because under this practical expedient, you don't have to reevaluate any leases to make sure the classification is correct. So in 840, if you said this is an operating lease or a capital lease, then you'll continue treatment as an operating or capital under 842 with the new lease standard. It'll just now go on the balance sheet still. So it doesn't change the accounting treatment, but it does change some of the upfront focus. So if you previously determined that the lease is capital, you're good to go, or it's just now called a finance lease. Of course, if you called it a capital lease incorrectly under 840, or if you deemed something not to be a lease incorrectly under 840, you don't get a pass for 842. So it still needs to be in compliance with 840 to be able to use this practical expedient. The third piece of the package is that you don't have to reassess any initial direct costs. And so initial direct costs are an area where treatment is going to change slightly under the new standard, and fewer types of costs are going to be able to be capitalized going forward. And so this expedient allows companies to continue treating initial direct costs the same way they have for existing leases, and just need to follow the new guidance on initial direct costs with any new leases that are signed. A couple things to keep in mind with the practical expedient package. Number one, it's an all or nothing election. And so you can't pick and choose which of these three you want to use. You have to choose them all together. It is a package. And also it has to be applied to all leases. And so one thing to keep in mind is that while the package of practical expedients is very helpful, it doesn't allow you to overlook previous errors that I mentioned before. So if you've improperly classified it, you don't get to continue with that incorrect treatment. All right. Another practical expedient that maybe is still helpful, maybe not as helpful, is the hindsight practical expedient. So this applies to, of course, the lease term and impairment to the right of use asset. And so this is really useful for companies that are going to plan to restate their comparative financial statements. If you're going to go ahead with the cumulative adjustment, maybe not as helpful as it would for those of you who are going to restate both years. So this applies to the lease term and impairment, as I said. And if you elect this practical expedient, when you adopt the new standard, you can use all the information that is known at that time of implementation. So you don't have to go back and recreate the facts and circumstances at the date of lease inception. You can go ahead and use the information you've learned since then. So this applies to estimates and judgments that are going to need to be made in the application of lease accounting, such as estimating whether the lessee is going to exercise a renewal option. As Michael said earlier, the term is going to be, are you reasonably certain? You're going to know a lot more a year or two or three into that lease. So hindsight will not change the facts necessarily as a new lease being signed, but it can certainly give you new insight into an existing lease at implementation date. So if you have a lease at inception and you're not sure at that time if the renewal period is going to be used, you don't have to include that period in the lease term. When you adopt 842, it's now reasonably certain you take the renewal option. Well, now this standard will require you to remeasure the lease when it became reasonably certain that you would exercise under the renewal option. But if you accept this hindsight practical expedient, you don't have to go back to the lease inception and remeasure the lease before the adoption. You just use the extended lease term at the date of implementation as if it had been in place the whole time. It also applies to the impairment of the right of use assets. Companies take all the facts and circumstances they know as of the effective date and of the new standard in determining whether or not impairment should occur. This one can be taken separately. It is not part of the practical expedient package, but it has to be applied to all leases, just like the one that we just looked at. So you can't pick and choose which ones you want to use hindsight on. You have to take this one and apply it to your entire lease portfolio. With that, I'll let Michael talk about short-term leases.
Thank you, Jonathan. Yeah, so as we talked about earlier, under the old lease standard 840, the big decision point was, is it operating or is it capital? And that would determine whether or not there was a balance sheet impact. And now, because of the adoption of 842, the question is really going to be, is this a short-term lease or is it operating/financing? Because now operating and financing will both have a balance sheet impact, and only short-term leases would not have a balance sheet impact. And so it's important to understand what is a short-term lease. And that is a lease that at the commencement date has a lease term of 12 months or less and does not include an option to purchase the underlying asset that the lessee is reasonably certain to exercise. So, and that's a little bit different, I believe, than IFRS. IFRS, if anyone on this webinar has IFRS, it's just you can't have a purchase option at all. So if you had a purchase option and you're not, going to exercise it, and the lease term, and again, that goes back to really what I say arguably is the most important part of 842 is determining that lease term. So this would be your minimum periods, and then any option periods that you're reasonably certain to exercise and such. And so if you qualify as a short-term lease, then you can elect not to record a right-of-use asset or a liability. And interestingly enough, when the lease standard was being drafted, there were some lobbying efforts to get this to be 2 to 3 years instead of 12 months, but the board didn't go for that, understandably so. And so after talking about the short-term leases, I want to kind of talk a little bit about the portfolio approach. So a lot of times whenever we have these really big new standards like 606 revenue or 842 leases, you know, they allow, the board allows you to have a portfolio approach, because sometimes you might have a huge lease portfolio, and obviously with revenue you're going to have a huge portfolio of customers and contracts. And so under the portfolio approach, there are certain things that you need to consider. And so lessees and lessors, the first thing to talk about is that they can use, when can I use it? You can use the portfolio approach provided that the application of the portfolio approach doesn't create a material difference from, you know, looking at each lease individually. Now, the board has said that they don't intend for that to mean that you have to quantify. That would kind of defeat the purpose, right, of doing the portfolio approach if you had to go and quantify the difference between doing it and not. But basically, you have to have a reasonable approach that you would reasonably conclude, a reasonable person would conclude that it's going to equal a materially the same answer as if you looked at each lease individually. So assuming that that's the case, then you have to think about what level of aggregation should I do? When I'm making this portfolio, how many different stratum or categories should I have? And so you need to think about things like have proper aggregation, the type of asset, the classification of that asset, renewal options, purchase options, the lease term, and in other words, the leases within that group need to be as fungible as possible with each other. And so those are some of the things that you need to consider when you're thinking about the proper aggregation. The next thing here is the discount rate. So you can apply a discount rate to a portfolio of similar leases. Lease term, same thing, and that's another reason why it's important that you aggregate at a proper level. And then the last box here I would say on the portfolio approach is that you cannot use a portfolio approach to determine whether the combined lease and non-lease components. That needs to be at the lease level. And with that, we are ready for our third polling question, and that is, how many leases do you have? And there's categories all the way from 0 to more than 500, or what I think is the more interesting response is, we're not quite sure. And that is, of course, one of the big decision points or things that need to be figured out to adopt 842.
All right, very good. So I know that you're going to keep going with other implementation challenges, but just to break down the results that are coming in, it looks like 15% are not quite sure yet. 42% have 0 to 10 leases, so glad that you're on here. Hopefully the transition will be a lot simpler for you guys. About 25% have 11 to 50, 7% have 51 to 100, and 11% have over 100 leases, maybe even more than 500. So a lot of work to be done for sure, and the not sure is growing as more results come in.
I find that interesting. I think that I don't know about you, Jonathan, but I do think that that's going to be one of the surprising things about implementing is just people not realizing that it used to be pretty easy to determine something was operating and it would be expensed, and how many leases do we really need to assess, I think is really something interesting that I was kind of surprised at when I started helping folks implement this.
Yeah, you're right. And so we've had a couple right now that have already used us, and with operating leases, the tracking is typically just not that great because it just doesn't matter as much on the balance sheet. But now that it does, there's a bit more of a scramble.
Yeah. Well, let's talk about some additional implementation challenges. there's an interesting number I want to show you all. The number is 55, and that is how much information, data points, if you will, from each lease is needed. Now, let me kind of preface that. That's a little bit to scare you, but also a little bit to kind of emphasize, what the maximum possible is. Most leases aren't going to require 55 data points or possible pieces of information that you need, but it could be up to 55. And so this is going to be one of the things that I think is most challenging in implementing, and we've encountered it with some of our consulting engagements that we're helping out with is, do you have a process in place to capture these 55 potential, and also to keep a record of them and any kind of decisions that you made based upon them. So the information tracking and identification is going to be much more stringent and needed under 842 than it has been under past. And some of the challenges that we've seen in helping folks out. The first one is just kind of, what you would expect. It's just, where do I begin? I mean, sometimes these things can seem so overwhelming, you don't even know where to start. And I would say, one place that might be that would be good to start is learning about it, which you all here are doing, and then also, determining, maybe a gap analysis, or even better, what are our leases, that kind of thing. One of the other challenges is, how do I track all this new information? I kind of alluded to that, or in the previous slide. Am I going to have software? Is this going to be something that I'm doing internally on a spreadsheet? That kind of thing. Policy elections. What policy elections or practical expedients should I adopt? Should I use that package that Jonathan talked about? Am I going to be combining non-lease components with lease components? Am I going to apply the short-term lease practical expedient, the discount rate practical expedient for private entities? There's a whole other, practical expedients that are lessor well-known, if you will, no pun intended, okay, pun intended. Land easements, or combining lease and non-lease components for lessors. There's a bunch of practical expedients that are out there, and you got to decide, which one am I going to choose or not. The other challenge is, how do I know if I've captured all the leases? And we've talked about that. Do I need to look at my disbursements throughout the year, and maybe if I can see disbursements that are made every quarter or every month, maybe that's an indicator that maybe that's a operating lease under the old standard that now needs to be moved over as a balance sheet impact a lease for the new 842. How should I update my accounting policies and processes related to leases? I always like to think of things from a chronological perspective. How do I identify leases? How do I then capture the potential 55 data points? How do I assess those? What are my policy decisions and practical expedients? How does that information get into either a software or a spreadsheet? How does that software or spreadsheet maintained? And then how does it go from there to the actual financial statements? Those are all things that can change because of 842. And the last big challenge that we've seen is how do I educate the users of my financial statements? My lenders. What about management or the board or my investors? That kind of thing, because there's going to be a big impact. You're going to see a big right of use asset on there and a liability, and that could have impacts on different ratios and potential covenants or incentive criteria, that kind of thing. And so these are things that you want to make sure that you have an education process on. And this is what, board of directors, this is what you're going to see differently in this coming financial statements. You want to be able to talk to them like that and educate them so that they're not surprised. That, we're going to move on to Jonathan, and he's going to talk a little bit about how Cherry Bekaert can help.
All right, thanks, Michael. So yeah, there's a lot going on here. Most of it is basically math and making sure that you're doing the right thing for your company, that you have a process that is repeatable. But really, it's not nearly as challenging on the creative side at 606, but it's still got, as you can see just from the brief pieces that we've given so far, there's a lot to do, and it's a lot of work. So to those of you that have been asking questions throughout, I appreciate that. We're trying to get to those throughout the webinar, so keep those coming. We are more than happy to try and engage that way too. But how can we help? Certainly we can do all sorts of things. This does depend if we do any test work for you or not. We'll change, obviously, with independent standards, what we're able to do. For those companies that, actually for any companies, I'll start with just any of the non-attest services or any companies that even if we do an audit or review or any other type of a test engagement, what are we able to do with you guys? All sorts of stuff. Number one is assist with the development of the implementation plan. So this can include providing a checklist for your internal lease team, including steps that the company can take to implement 842. That's something that Michael and I and the professional practices team have developed here. And so we've got plenty. You know, we love our checklists. And so we've got fairly exhaustive ones there to help your team get started. We can assist in completing a standard lease questionnaire that you can use on each lease to get some of those data points that Michael discussed earlier. We can help identify where you'll need to make any management assumptions or policy elections, and then of course determination of any process controls or IT systems need to be updated to meet the needs of the new standard. Another thing we can do are basically things like this. So training and education, virtual, on demand, in person. There are some links on our website that have some previous webinars or other guidance, and we'll take a look at that here in a second. That is, you are more welcome to use internally if you would like, or send all your family and friends. We're happy for that to be distributed there too. Related to this, we can provide authoritative or interpretive guidance or discuss any guidance with you, or we can do customized trainings for you as well if that's something that you and your team would like. We can do brainstorming sessions to assist in identifying unique lease terms, and so that can be something as easy as looking at some sample leases in your portfolio. To help with that, we can look at examples of ones that have either been filed or ones that we've worked on or written for comparable companies in similar industries that can help with some of the impact analysis that you have to go through. And the one that we'll look at here in just a second is access to a cloud-based lease maintenance software that can be used to track all of your leases. And so I'll provide some details on that here in just a second. If you want to maintain your leases in a different system, we can also help with vendor selection. We've got some relationships with a lot of the big players in the lease maintenance software arena, and we're happy to assist with any of that. And the last thing we can do for all clients is analyze potential impact on the financial statements, debt covenants, incentive comp, and so on. And so this can include discussions on tax. This can include reviewing your debt and incentive agreements or any other balance sheet related metrics, or giving guidance and checklists related to the new disclosures that you'll need to have. For non-attest clients, so anyone that we don't do any attest work for, there are some additional things that we're able to do. We can help draft accounting policies and manuals, and so that it could be anything determining which assumptions or practical expedients to use, helping determine any or necessary policy elections that you might need, in even designing controls or processes. Of course, we can't do any of this for test clients. For independence purposes, certainly analyze contracts or input data. Actually, us do the data input into lease maintenance software. If you are in a test client, obviously we can give you access to it, but we couldn't do the data input for you. Non-attest, we can certainly do that. And then, of course, we can separately analyze contracts to determine proper treatment for you too for non-attest. One of the ones that Michael's brought up a couple times is assisting in the identification of the leases. We still think that this is going to be one of the bigger challenges, especially for those of you that have a decentralized lease portfolio. And so this is something that we can help. We can do all sorts of things by interviewing, by looking at GLs or subledgers, or any other pieces of data to help identify all of the lease contracts in your portfolio. And then the last thing is, instead of just providing a checklist for the disclosures, but help drafting those financial statement disclosures. There's a lot more to the disclosures than in the past. There's a lot more on our website that you're welcome to peruse. And so if you just go to cbh.com, under services and assurance, we have a page dedicated just to lease accounting. It's got a few of our previous webinars that we've recorded, also one specific to GASB, as they're working on a very similar standard to 842, a few blog articles, one on anticipating the new lease standard, one on analysis of our spreadsheets, the right answer to a lease solution, and then some contact information. So plenty of resources out there. We're going to continue to populate that with more and more as we get closer to the implementation date for many of you. What I would like to do is just highlight, like I said earlier, a little about the lease maintenance software that we're able to provide to companies. And one of the reasons that I would like to go over that is kind of why we're doing that. Most of us are using Excel. So 68% of companies are using Excel in their leases. This is based on a CBRE survey not too long ago, and they found that the vast majority of folks are really tracking leases in Excel. And under 840, that totally makes sense. But having so many other data points to track, having so many other formulas that are going to need to be there depending on classification, any reassessments that need to be done certainly make things much more challenging. And so the need for Excel, if you have a very small portfolio that doesn't change very often, maybe it's a few offices, maybe not the biggest deal, but once you start getting equipment leases in there, or you start to reassess the term and now you are reasonably certain, or if it crosses over that short-term lease exception, things get messy really fast in Excel. And so another piece of this is about 39% of companies are using lease tracking in a decentralized manner. And by that, I just mean it's handled at the department level, and maybe not in the accounting department, but just at each department themselves are in charge of their own leases. Many are looking now for an opportunity with a 42 to upgrade the technology and the process at the same time. And so, of course, you could centralize your lease administration, or you can educate each and every department on how to do this, and then follow up with your implementation plan and make sure that they're doing this on a routine basis. Both of those are fairly challenging to do, but we're under the impression that if you can centralize, which doesn't make sense for everybody, but if you can centralize, this would certainly be the time to do it. And then lastly, about 10% have selected a lease solution outside of Excel so far. We're thinking this is going to need to be a lot more than that. Our sense is that Excel is just not going to be the solution for the vast majority of companies. There's a need for a lot more tracking. You've got payment schedules, you've got amortization of the right of use asset, you've got amortization of the liability. You need to update the schedules every time a lease is modified, the term or the rate changes, extensions. You got to analyze it for impairment. It just gets messy really fast. So in fact, Michael and I and a few others have gone through a lot of the very popular lease packages, and they have gotten really good. We will just say at the beginning, once the standard was released, I will say that it was not looking great, but they have really caught up quickly, and there are some really good ones on the market. Some are very robust and will tie into your ERP system, do the journal entries for you, and will do things on a much more automated side. They do certainly come at a cost. Some are on-premise, some are in the cloud. We're happy to have those conversations. One that we've partnered with exclusively is a much more cloud-based, in the hands of the company type of solution. I would just like to show you a few screenshots to give you a sense. Most of them work very similarly. This is something we can go into more detail if you are interested. I'm a coffee guy, so I just created a fake lease here on an espresso machine, but of course this could be for anything. And so here is just your general input screen. You go lease by lease. you input some of the terms that are necessary to implement the new standard. If you are confused or don't know what that lease term should be, maybe the non-cancelable piece is easy, but then you've got confusion onto whether or not you're going to extend the lease and you need some guidance there, you can run a lease term guidance wizard, and that will take you through a series of questions that you would need to answer. There are more than just this, but this gives you the documentation that you would need to explain to your auditors or to whoever else on why the lease term is what it is. And so based on your answers, we're going to use this date, and so then that goes back to that previous screen and locks it in. Continue with that, the other big piece is lease classification. You can see there's another wizard. Software loves to use wizardry, and so here they are, and it walks you down how to classify that lease, and so whether or not it is financing lease or a direct lease or operating lease. And so, again, this is more just policy that says here is why we've chosen what we've chosen. A lot of those nebulous terms that Michael described earlier, like reasonably certain or major part, are highlighted to give you some guidance there to help your teams input those correctly. From there, there's a lot more to all of these softwares, but from there, you would then be able to export at any given date, whether you're doing interim statements or monthly close or just need to provide something to your auditors once a year. You can export the transition entries into Excel right here, or you can export just your monthly entries into Excel. You can go through and export the amortization schedule at any given time. The footnote, not the exact footnote in verbiage, but the mathematical pieces of the footnote will then be exported for you too, such as the weighted average interest rate or the weighted remaining lease term that is across your portfolio. This is compliant, as are most of them, with 842, or if you have some international reporting components, the equivalent IFRS 16 is also included. You can use this with multiple foreign currencies, and it will help do some of the currency exchange for you too. As far as looking at the output, this is a common Excel piece that would be the amortization schedule. It goes on for columns and columns and columns, and so there's a lot more to it than this, but just for purposes of screenshot, this is something you can obviously use for your own internal analysis. The journal entries will go through, and you can export by the month, by the year, or any other custom date range that you would like. And so you can see in here, you would input your GL numbers, your GL descriptions, and it will tell you, as will all of the other softwares, what those journal entries should be. It will also prompt you, as most of the softwares do, that you're going to need some new general ledger accounts, and so you'll need to set one up for your right of use asset, for your right of use liability or the long-term lease liability, among some other ones there too. And so it will certainly tie into your existing GL accounts, but you're likely going to need to create some new ones, and most software will help prompt you through that too. I mentioned the disclosure piece, and that is also a piece that I think most of them are doing a pretty decent job with guiding you through pieces of the disclosure that will need to be included in your lease analysis. And this, of course, is something you'll need at least every year, and if you do interim reporting at those times too. And so maybe during another webinar, I know we've done it in the past, we can go over some of the disclosure requirements, but these are the mathematical pieces of that. So a lot going on with that. If you would like some more information, please feel free to reach out to me or Michael or anyone else on the website, and we're happy to give you more information there or guide you through your own journey of finding a good lease provider. There's a lot going on, and while Excel is good, I think we've mentioned several times, there's a lot to it that maybe Excel can do, but maybe it shouldn't be doing. All right. One other piece that I would like to talk about briefly is that we do obviously understand that you're going through probably an audit in the next few months, and also you're going through 606 implementation. None of those are very easy to do, but this is certainly a standard that does need some of your attention too. We will be doing future webinars coming out soon. The most recent one coming up, and we'll be advertising this in the next couple weeks, is just some illustrative lease examples that we'll write and give you a walk down on exactly how to go through and think about this, maybe that align more closely to your custom lease portfolio. If there are any other specific trainings that you'd like to see as it relates to 842, we would love to hear that. And so on the survey that comes out after this webinar, please don't be shy in inputting that. I would love to see that. I'll go ahead and say here that we got, for public companies, 14 days you've been under the lease period if you're a 1231. For private companies, you've got about 352 days until this is effective for you. So I hope we've let you know that the alarm needs to be set. And so it's probably time to start thinking about 842 as soon as you pick your head up from RevRec and from your audit and your day job, which we know that you've all got. We're all very busy, and this is going to be another one that keeps our job secure for a little bit longer. And so I'd like to go ahead and open up our final poll question of the day. And it says, what part of the implementation do you believe is going to be the most challenging? Do you think it's going to be identifying all leases and embedded leases, maybe the transition and calculating all of the adjustments that need to be done, determining your policy elections or practical expedients and which ones to use, lease maintenance and tracking this throughout, or determining updates needed to processes and policies? So clearly, there's a lot going on here with the standard. It looks like for our group here today, most of you think it's the transition and calculating the necessary adjustments. I think that's probably true. We've got, maybe if you have a large lease portfolio or you're nervous that maybe you do and you just don't know it yet, A is in second place with 28% saying identifying those leases, 43% saying transition, and then the rest of you kind of split fairly evenly between C, D, and E. All right. I see that we've got a lot of the questions that have been answered throughout there, so I appreciate that. I will go ahead, and I think we can go ahead and close that poll. Please feel free to reach out to Michael or myself, and we are happy to answer any other thoughts or questions or take any suggestions that you might have. We are here to help, and thanks so much for tuning in, everybody. Please fill out that survey that'll be coming shortly to you. And with that, I hope you have a great rest of the day. Thanks, everybody.